Welcome to Markets Now. I'm Michelle Rook with Chuck Shelby of Risk Management Commodities. A higher day in livestock, a lower day in the grains, and a disappointing day at that, Chuck, especially after higher weekly closes last week in all but July corn futures. We couldn't see a lot of follow through buying interest today. Was it all about the weather, or why are the funds continuing to sell?
The funds, I think, are just looking forward to the weather. We've seen some good rain potential in the western states. There's more potential rain coming. Here in the east, a lot of areas suffering from too much rain. I think maybe the funds also are looking out there at some, unrest in the world. The Ukrainian war is escalating again. So right now they seem comfortable adding to their shorts and pushing these markets down.
We saw funds actually add to their short position as of the Commitment of Traders report in all the grains, didn't they?
Yeah, and especially in corn, they're going to be, extremely getting to a large position, but they're comfortable with that. Maybe as we move into the next 2 weeks before the end of the month Acreage report and quarterly grain stocks, some of them will want to, pull off. That's not unusual as we enter into, end of a quarter when they're short the market so heavily. I would anticipate some of them willing to take their profits and get out of the market. So, but it probably would be more towards the last week of the month before I think they would do that.
You mentioned the weather, but yet there's a lot of frustration in the east and the south with too much rain. Talk a little bit about that, because there's some acres of corn that maybe aren't going to get planted, you think?
Yeah, you look at the farmers we work with in southern Illinois, Indiana, Ohio, parts of Kentucky, Missouri. The planting of corn down there is done after this last rain. There's more rain scheduled for this weekend, so it's just too wet down there. They're too far into it. It's extremely wet. Even acres that were planted, there's ponding. There's a lot of weeds problems that are developing. So corn planting is over with as far as those areas, I believe. The question becomes, do that get switched to soybeans, or do they just leave it idle? I mean, if you look at a producer's standpoint from those areas, I mean, it's not like corn's $6 or $7 and they're motivated to plant with these kind of prices and where inputs are. I think it's highly likely that those acres will just go to prevent plant and possibly to some beans, but that's still probably a week away or maybe 2 weeks away before a lot of them could get back in the field.
Right. And in the meantime, next week might be the last week where we see corn planting progress from USDA. And so what's your thoughts about how many million acres might be lost, and will it show up in the June 30th report at the end of the month?
Well, there's a point there past crop insurance where USDA calls it 100% planted. And the question becomes, again, how many acres? I could see up to 1 million, 1.5 million acres that have been prevent plant, or certainly maybe some of that gets switched to soybeans if they can. But the bottom line is, does the USDA show that in the June 3rd report? Probably some of that shows up, but I don't know if the entire amount shows up. But certainly it's an impact down there, and the market hasn't really seemed to care about it, or kind of really has discounted it. But it certainly is a factor down there. And the other factor would be the yield. A lot of these guys have planted late, or they planted in conditions that weren't really good. They've got water standing on it, or it's late planted, or they haven't been able to, kill weeds or side dress or do whatever, farmers would tend to do. So one or two things are going to happen. It could be an acreage reduction, I believe it should be, and also a yield factor in those areas down there when they're planting that late and the conditions they planted in. The guys that did get it done, it's certainly not the best for those guys down there, and it's a fairly large area, I think, that the market has discounted and doesn't understand.
Yeah, you mentioned China, and of course, last week I felt like the soybean market was putting in a little bit of premium on hope that maybe we would start to see the ice thaw or a truce between the two countries. How do you think the market is perceiving that right now?
I think that might have been part of last week's rally, was looking forward to that, but I think the situation or the problem with China is it's going to take quite some time probably to get to a point where we have a deal made. And unfortunately for farmers, that's the key to making a deal, and seeing them come back into the market would really turn things around. But again, there's a long ways to go, and it's just the beginning phases of this negotiations.
And with the WASDE coming up on Thursday, since we were talking about demand, do you anticipate USDA will make any adjustments, especially say on corn exports?
I would hope they would reduce, the carry out some. Ethanol usage and production's been good. We've been using it there. So I think there's a pretty big window of opportunity for them to really, there's about 100 million bushel minimally, maybe 150 million bushel that's not been accounted for by USDA so far. At this point, the world buyers have come to the U.S. The price is, low. The dollar's cheaper, so the demand is there. So we need to see that show up, and I would hope to see that on Thursday morning.
Any changes on the balance sheets for either wheat or soybeans?
The bean exports, we've been, moving there. We're a little bit ahead there too. Wheat, continues to struggle. So maybe minor changes there. I think the big change is over in the corn market. It's where it really is a number that's pretty hard to ignore when you look at how far behind USDA is.
Cattle futures making all-time highs again here today, and with the futures as big of a discount as we have them to the cash, do the futures just have to keep going up, you think?
Yeah, I think that's why the funds are long in that cattle market, because they understand that futures has to, merge in with the cash. We're seeing some really strong cash markets out there. Again, it's a grilling season. It's understandable that demand is there. It's just the beginning of the grilling season. So consumers, are willing at this point to continue to buy. So I think, we're going to have to see those June futures move pretty aggressively towards where the cash market is.
So you don't see any signs of demand rationing at all yet then? Indeed.
No, not right now. I think a concern would be as we move forward throughout the summer, that consumers, do they back away? But I think that's also helping the pork market out.
Yeah.
When consumers move over there, and that's given the pork producers a really profitable price.
Hogs, new contract highs, and do you think that's all about the cattle, or how much of it is about following cattle versus their own fundamentals there with lean hog index and the cutout values up at levels we haven't seen for a couple years?
It's a combination. I mean, the shortage of beef, or the high price of beef, is certainly, gives the pork complex the support it needs. And again, the consumers are, wanting to spend the money. They're putting it over into the pork. And, a little bit it might be there's some disease factors out there in the hogs. And so a combination of things, maybe the numbers, the weights, and the good demand. My concern would be in the long run, though. Do we run out of demand as we get to the end of summer? But again, we're just starting this grilling season, and we've got everything working in the way of the producers right now currently.
So do some risk management is what you're saying.
Yeah, absolutely. And, a lot of the guys we work with are using some put strategies. There's some really cheap prices as far as options go that allow the producer to be protected in case the black swan event occurs that we can't predict. And they got some profit there. They got some profit to work with to be able to protect themselves with put options.
All right. Thanks so much, Chuck Shelby, Risk Management Commodities. That is Markets Now.